Welcome to Java. Thank you kindly for joining me. It's March 11th, 2025. It is also Tuesday. There is a massive amount to cover again today. So many things going on between yesterday as we move ever closer to that singularity event that is sucking in not just the US dollar, but all currencies and any value they had along with them. Now we've got everything going on from government shutdowns to new laws with cryptocurrencies. So, as always, thank you kindly for being here, as well as the vote for the new date for the weekend, which will be Sunday. It appears again that is the best day, although it just won't be early. So, I'll start doing that again since we've got so much happening so rapidly in these markets. Let's get started with this morning, as always, with our favorite indicator for the risk is the MMRI. Now, we're facing an anomaly right now as it is dropping. The stocks are not acting as they would with that risk. They are increasing in the risk. So we're still in extremely high territory, but this is for the flash crashes. So the elements that are within these are the 10-year yield as well as the relative strength of the dollar, both of those pulling back and dropping. Now, 10-year yield 4.21 yesterday was closer to 4.25. The relative strength of the dollar has now plummeted versus many of the other currencies. And the EU is now actually stronger this morning. So that has caused a shift in multiple things. We'll go over those as well as the markets. The fear greed meter is sitting in extreme fear this morning, down from 19 down to 15 on this scale. So what does this mean? We are hitting that extreme territory. I expect, because of the entire environment, multiple factors, that we get a temporary reprieve. Now, with this, if we look at the stock market, they're poised in the red at the moment. They had quite a drop yesterday on this sentiment shock. Now we're getting the CPI numbers on Wednesday. This is tomorrow. We'll talk about that. No one wants to call this what they're referring to it as the R word, and it's a recession. We're in it. And instead, they're talking about how this is opening the credit markets. This means more debt. So they're very happy because they're saying that this would open up the credit markets for more spending because the environment is bringing in more of this deficit spending since they don't have it anymore. So it was the worst day since 2022. They're saying business activity was affected by a quote unquote pause because they don't want to talk about pullbacks. It's like it's a dirty word in the market to talk about a correction, which is completely normal in most markets. Now, today we've got business execs that are meeting at the White House. They're going to be discussing several things. So we'll see how that goes, and we'll talk about that in a bit. First, I'd like to go back over to cryptocurrencies. Back over 81,000 for Bitcoin at the moment, still showing a bit of weakness, did have a spike down. I don't think that's the end of it quite yet. Now, with this morning in the stocks, what I'm seeing in the overall environment, it's highly oversold in the short term. That means, along with the futures, the way that they're looking, I expect a bit of recovery. We'll see what happens. Expectations don't really matter in the markets, but what it looks like, it appears the probabilities are favoring short term recovery in the markets for this morning, in particular, some severely oversold stocks such as Tesla. Now, this is not financial advice. You have to make your own decisions. But looking at this in the longer term, it appears there's quite a bit more to go in this market to be recovering from. So, more drops in the future, but for the moment today, it appears there might be a bit of a bounce. Some call this dead cat bounce. So, watching those on the horizon, always know your levels if you're going to be in this market and expect volatility. So jumping to our calendar, we're getting the large thing really at 10 a.m. is the JOLTS, job openings. So we're going to be watching that because the real factor for the economy, the measure now is unemployment. Now, they also skew these numbers, but real unemployment sitting right around 9 to 10% in the United States. As I've said multiple times before, I do expect that to hit more around 20%, just above for the United States, before this recovery truly begins to occur. We've got quite a bit more washout that is coming, and this is not over yet. We're just going to get a temporary reprieve, very likely today, and it doesn't have to happen either. So tomorrow, getting CPI, so I put in the Wednesday calendar as well, because that's going to be the large one. Towards the end of the day, you will see that affecting the markets as well. We've got US consumers' pessimism growing, obviously. Long run inflation saying it's stable simply because it's between 2 and 4%. So, what that means is you're going to lose value in your dollars at a guaranteed rate of at least 2%, likely more. So, that means buy assets. If you haven't been here, you knew. Buy assets, gold, silver, um, land, property, that is, but you have to shop for these things. So we've got as I was saying, the euro strengthened too. This is supposed to say a 4-month high. The 4 got cut off, but we're watching large shifts in the currency markets. I want to mention shortly that OpenAI has done a $12 billion deal with contract with CoreWeave. Now, they are central providers of the cloud-based systems. The reason I am mentioning this is because artificial intelligence is a major market mover going forward, so it will affect not only that stock, but all of the sentiment shift stocks that go along with it for the artificial intelligence plays. NASDAQ got hit very severely yesterday, so that will be a sector that should have a bit of a recovery today. Now, X yesterday, was formerly Twitter, was hacked yesterday by a group called quote unquote Dark Storm. I'm not making this up. I don't know what you would expect from people that very likely sit in their basement looking to cause issues. But Dark Storm is what they've chosen to call themselves, and did a denial of service attack on X with some outages, not really anything major, but it did affect their service yesterday for a bit. Now, more importantly, we've got the broader economy showing the dichotomy between high-end consumer versus low-end consumer. But the problem is that now this two-tier system, the high-end consumer has been holding up the economy, but that is shifting. Now, under the sentiment shock, as this says, inflation has taken a huge toll on lower income Americans. And this is globally, it's not just in America. But now they're having even more difficult time making ends meet, and we're seeing this now in demand. We got a warning this morning from Delta Airlines saying that the economy has softened. They're expecting much lower demand, slashed their profit forecast in half, and this is hitting all of the airline stocks across the board, but rippling through stocks because the consumer is indeed weak. So longer term, as I said, more to go, and we'll keep an eye on this. Now, with the stock market getting hit, international investors are selling off US stakes, not just US dollar, but also US stocks. They moved into the EU as well as Asian markets yesterday. So, United States is also facing, I would like to mention, the government shutdown. They will have a vote today. I expect that they will extend, of course, as they always do, the government debt so that they can continue this fiasco that they've got as far as government spending. So, moving over into the currency issues that are going on, the debt market that is driving all of this is global. Japan's debt market is now blowing up. The bond yield soared to the highest level since 2008. Now, for reference, this is the highest yield rate since the 2008 Lehman Brothers shock, sent this one soaring as well. So, major issues with this, it's showing flagging huge warnings. When this happened, this spike in rates also showed that there is an issue with our market. And if you remember, the August dump was on them doing one rate hike. They could do multiples. They're facing issues with their over tourism and facing inflation as well. So we can expect more issues from Japan. It is an issue. They've still got massive amounts of US debt they hold in their sheets that if things get really bad, they will sell those, get out of those assets. That will cause a problem for the United States markets. So going over to crypto and CBDC, we've got crypto executives like Coinbase's Brian Armstrong, as well as a couple of others that are testifying in congressional hearings, and they are also meeting with Trump about banking restrictions. Now, this is setting the stage so that they can kind of get in on these banking regulation drops. Trump just signed an executive order letting crypto companies into the Fed's payment system. Now, Anthony Pompliano has been a large cryptocurrency, in particular Bitcoin, advocate for since very early on. He's positing that Trump is deliberately crashing the markets in order to get interest rates down. I posit that he is possibly deliberately crashing markets or on a larger sector, and that is in order to let this crypto company payment system happen. Now, this is the Fed's payment system, proposing now that the cryptocurrency go onto their system. We've known this is going to happen. I cannot stress this enough. This is the CBDC coming in. So, Coinbase also to launch 24/7 Bitcoin and Ethereum futures trading in the United States, these two in particular, Coinbase and Kraken. Also, this would include Robinhood and the likes of others. Now, Kraken is also authorized as a money institution in the UK. So, with this, we're watching major shift in the banking environment. Now, as he was saying yesterday, we went over this, that they're going to put a lot of thought into stable coins. So with this, USDT and USDC stable coins surged $1.3 billion the past 7 days. Now, with the fintech execs pushing these stable coins, they're going to get this through. We were hearing about the housing and urban development putting their payments on cryptocurrency. So this is the shift. It is happening now. It's happening very quietly and in the background. One last thing I want to bring up is that this is the summit. This is happening in Jeddah. And this is between Ukraine as well as the United States for talks over the peace talks, so to speak. And this was just after some drone strikes that happened in the morning, both sides going into this. And then the last thing I wanted to mention was the cargo ship hit a tanker. This was in the North Sea. The tanker was carrying jet fuel for the United States military. Both vessels are on fire, and it sent massive amounts of this fuel pouring into the North Sea. So they're concerned now about the effects that is going to have. But the backdrop of this is what is happening with all of these systems that they're going down between not just the naval systems, all of the issues those are happening, but also with the air system. So with this, I wish you a wonderful green trading day, a great day in general, and until I see you again, of course, stay free.